Robert, with this week's data, we are seeing the full effects of mitigation for COVID. What can you tell us first about retail sales?
Yes, Susan, we saw a very big hit to April retail sales, as expected, down 16.4%, and almost all categories were down with the exception of non-store, so that's online shopping. So we didn't go to the store, but we did get a lot of boxes in the mail. But overall, consumer spending well down, and that confirms our widely held suspicions here that we're going to see a pretty negative second quarter GDP print, because retail sales tell us what's going on with overall consumer spending, and overall consumer spending is 2/3 of GDP. So it's going to be a pretty bad print when we see second quarter GDP.
Robert, let's move on to unemployment claims. Those claims are still at a high of 3.2 million, but they are trending down, correct?
Yes, we did see the initial claims numbers for the second week of May, 3.2 million. But the total for the last, I believe, 8 weeks now is 36 million, which is consistent with a very high unemployment rate of about 20%.
And Robert, getting back to some of the data that was out this week, what can you tell us about industrial production?
Susan, just like in the retail sales numbers for April, we saw a big hit to industrial production for April, also down about 11.2%. No surprise at all, and really given the auto production numbers, unit auto production, almost nothing in April. We saw that in the detail in the industrial production numbers. That is starting to come back, but this is definitely an economy that felt the weight of social mitigation from the consumer side, also from the industrial side, and now we're starting to see that open up. So that's good to see that in front of us, but lots going on now, lots of churn going on in the economy.
Robert, earlier this week, Fed Chair Jay Powell made some comments that made headlines. What stood out to you?
Yes, Chair Powell's comments that really captured a lot of the financial press, focused on the idea of negative or non-negative interest rates in this case. And Jay Powell confirmed that the Fed is not interested in going to negative interest rates. That has been bubbling up in a lot of the analysis lately. Some other macroeconomists outside the Fed have been talking about the policy of negative rates. And I just want to be very clear here, the Fed has been absolutely consistent about not wanting to go negative. Jay Powell has been consistent. All the other members of the Federal Open Market Committee have been very, very consistent. So this should be a closed book, at least for the next several months, the remainder of this year, that we are not going negative.
And Robert, to end on a positive note, we do have some good news about mortgage applications.
Yes, Susan, we track those on a weekly basis. And the good news in this economy is that mortgage applications for purchase, which are directly related to new and existing home sales, are holding up pretty well. And so the housing market is getting through this. It's fallen off a little bit, but the demand is still there. The supply is still coming into the market. It's a tight market, but consumers, households are going out there and purchasing new and existing homes, which is a very, very good sign, taking advantage of very low interest rates. And in my view, that's one of the bright spots, and could be one of the bright spots for the economy coming out of the COVID recession, in that there's been an undersupply of housing now for quite some time. So a lot of pent-up demand out there, and housing could be one of those accelerators for the U.S. economy once we clear the hurdle of COVID-19.